Good afternoon, everyone. I think we have hit 12:30 mark, so our webinar folks should be joining us. Thank you to everyone who is here in Washington, D.C. with us today. It is a very cold and rainy day, and I really appreciate that you decided to brave the elements and join us. My name is Janice Ryan, and my colleague here.
Hi, I'm Meredith McCoy.
We work in Venable's nonprofit and political law practices. We have a lot of nonprofit clients. There are public charities, social welfare organizations, trade associations that are actively involved in advocacy. And some of that advocacy may be lobbying. And so we're excited to talk to you today about the do's and don'ts of lobbying for nonprofits. Before we dive into that topic, I hope you will all consider attending our next nonprofit group monthly luncheon, which is scheduled for March 12th at this time, noon. I guess the webinar will start at 12:30 and run to 2 p.m. And the topic is developments in privacy and data security for nonprofits. And we'll talk a little bit about that as well in our presentation today. I think that's a really interesting and timely topic. So without further ado, we'll get started. Today we're going to talk about 5 major topics. Meredith and I will be bouncing back and forth between the different topics. We're going to start with the tax rules for lobbying. What do you need to know in order to protect your tax-exempt status while you are engaged in advocacy? There are also some special restrictions on lobbying for those of you who are recipients of federal funds that we'll discuss. We'll then shift gears a little bit and talk about lobbying disclosure laws, primarily at the federal level, which we'll use as an example, but lobbying disclosure laws exist in every state and often at the municipal level. So we'll talk about what lobbying disclosure laws are and what you need to know to comply. Then we'll shift gears and move into ethics and gift rules. So perhaps your organizations are interested in sponsoring policy conferences or events at which you treat government officials to beverages or lunch, like those of you who are in the room today are enjoying. We'll talk about the do's and don'ts for ethics and gift rules. Again, primarily using the federal rules as an example. And then lastly, we'll shift into some miscellaneous compliance issues that come up when you're engaging in grassroots advocacy. So perhaps your text messaging campaigns, maybe you are advertising on Facebook. There are some unique compliance considerations to keep in mind, and so we'll conclude on that topic. So let's start with the tax rules for lobbying. I'm going to do an overview first for 501c3s, and then we'll do 501c4 and c6s, which really are treated the same for purposes of this presentation. So to come back to the 501c3 slide, there are actually 2 categories of C3s that I want to talk about at the very beginning. And afterward, everything else in this presentation that you will hear relates to public charities. So I'll talk about private foundations for just a moment, and then you won't hear about private foundations for the rest of the presentation. You should assume all of the rules that I'm talking about relate to public charities. So a public charity, as a 501c3 organization, derives most of its support from the public or from government funds. Public charities can lobby. You're allowed to lobby. There's, I think, some confusion amongst some who think, no, charities are not allowed to lobby. Well, the rule is that you may, provided that lobbying is not a substantial part of your organization's activities. And we'll talk a little bit about how we know whether lobbying is substantial in the next few slides. The other thing to know about public charities, although this presentation isn't really about election-related activity, this section of the presentation will touch on that a little bit. Public charities are prohibited from engaging in political campaign activities. That means you cannot engage in activities to support or oppose candidates for public office, federal, state, or local level. That same prohibition applies to private foundations, but private foundations are more limited than public charities. Lobbying is not permitted for a private foundation. If the private foundation directly engages in lobbying or provides grants that are earmarked for lobbying to another organization, the private foundation would be subject to excise taxes. Private foundations may, however, support charities that do lobby, but those grants, as I said, may not be earmarked for lobbying. C4s and C6s, you may engage in unlimited amounts of lobbying in furtherance of your particular tax-exempt missions. Why do we care? Why do we have a difference? Well, Congress has made a policy judgment that the tax codes should not subsidize lobbying activity. And the 501c3s are limited in the amount of lobbying they can do because donors to the 501c3s are allowed to take a tax deduction for their contributions to the public charities. So because public charities can receive tax-deductible donations, they're limited in the amount of lobbying that they may engage in. C4s and C6s do not enjoy that tax deductibility for the donors. When donors give to a C4 and a C6, their donations are not deductible as charitable contributions. They may, in some cases, be deductible by the donors as ordinary and necessary business expenses. But as I said, Congress has made a policy judgment that lobbying expenses should not be supported by the tax code. Lobbying expenses for any taxpayer are not deductible. And so not only, so the rule here for 501c4s and 501c6s that is important that we'll discuss is that the lobbying portion of dues paid to C4s and C6s are not deductible by your members as a business expense. And how do you know? Well, you, the organization, have to tell your members the percentage of their dues that are not deductible so that the donors will not take a tax deduction as an ordinary and necessary business expense. We'll talk about that a little bit more. I have to apologize. I'm sorry. I was going to say this at the outset, but I have a terrible cold, so my voice sounds awful, but I'm going to power through. The last thing to keep in mind about C4s and C6s and how they're different than our C3 clients is that the C4s and C6s may engage in limited political campaign activities. You can support or oppose candidates for federal office, provided that that is not your organization's primary activity. That said, political campaign activities are also regulated under federal and state campaign finance laws. So the tax law is not your only concern. You also have to keep in mind campaign finance laws if you are going to engage in that kind of activity. So those are the basics. We're going to start with public charity lobbying rules. What is lobbying? What do we care about in terms of our tax compliance for public charities? The basic general concept is attempts to influence legislation, just legislation. It could be at the federal, state, or local level through direct or grassroots communication. There's two options for measuring compliance with the 501c3 limitations on lobbying activities. It's either the no substantial part test, which is the default test, or what's called the 501h expenditure test. So this is how we know, public charities, have I engaged in too much lobbying? The no substantial part test is unfortunately vague. It's a facts and circumstances test. This is an I know it when I see it test. So if you happen to be audited and the IRS was trying to examine whether you had engaged in substantial lobbying, in other words, too much lobbying, they would look at all the facts and circumstances and make a determination, yes, this is too much, or no, it's not. There are also very strict sanctions that come with the substantial part test, which is basically revocation of exempt status. Also, the IRS could impose a penalty tax on the organization and its managers for having engaged in substantial lobbying. The 501h expenditure test was added to the Internal Revenue Code by Congress because they wanted to make sure that charities could find some comfort in lobbying, that they would know that they were not engaged in too much lobbying based on some very clear rules, which do not exist under the substantial part test. So if you choose to elect to measure your lobbying under the 501H test, you simply have to measure the amount of lobbying based on your expenditures. The lobbying will not be considered substantial, provided your organization does not exceed specified caps. In the next slide, I'll show you what those caps are on expenditures. You also get to take advantage of very clear definitions of what is and is not lobbying. And we'll go over what those are. In order to be governed by the 501H test, you have to file a form with the IRS. It's a one-page form. It's very simple, Form 5768. And if you elect the 501H test, you also get the benefit of flexible sanctions. So instead of revocation, if you engage in substantial lobbying over your specified expenditure caps, there are tax penalties that you might pay, 25% on the amount spent over the cap in a given year. There are no tax penalties imposed on the managers of the organization if you exceed the limits. And revocation is only going to happen if you exceed your caps. You exceed 150% of your caps over a 4-year consecutive period. So what are the caps? This is a summary of the caps. An organization that makes a 501H election can spend 20% of its first $500,000 on lobbying. So that's $100,000. You can spend 15% of your next $500,000, 10% of the next $500,000, and 5% on anything over $1.5 million. Up to a cap of $1 million. This cap can be a problem for public charities that have significant budgets. If your budget is about $17 million, you would reach the cap of $1 million on lobbying. And so public charities that have significant resources, more than $17 million of exempt purpose expenditures or budgets in a given year, may decide that it's better for them to choose the no substantial part test because they may be able to spend more on lobbying than they would if they elected the 501H election. But for most charities that are under that $17 million threshold, the 501H election is really beneficial, and it gives you a lot of comfort in terms of how these rules apply, and that you will know clearly whether you've engaged, in substantial lobbying. One other important note about the 501H caps: grassroots lobbying expenditures are limited to no more than 25% of your total cap in a given year. So if you are permitted to spend up to $100,000 on lobbying total, only $25,000 of that $100,000 can be spent on grassroots communications, which are communications to the general public. So let's talk a little bit more about the difference between direct lobbying and grassroots lobbying. Under the 501H election, direct lobbying involves attempts to influence legislation through communications with covered officials. So this involves, going to the Hill, if you were here, talking to members and their staff. It may be any government official or employee who may participate in the formulation of legislation, or it could be the public in a referendum, initiative, or a constitutional amendment. In that situation, the members of the public in a ballot initiative, for example, are considered the legislators. So if you engage in communications with the public with respect to a ballot initiative, that is direct lobbying. The communication must refer to specific legislation and reflect a point of view on the legislation. Grassroots lobbying has 3 important elements. Its attempts to influence the general public through communications that refer to specific legislation, reflect a point of view on the legislation, and include a call to action. This last element is really important. What is a call to action? It may be call your member of Congress and tell them to vote for H.R. 1. That is a clear call to action. If you sent a piece of mail and you had a tear-off card that they could drop in the mail to send to their member of Congress, that would be a call to action. If you don't include a call to action in your communication, it's not going to be considered a grassroots lobbying communication for those of you who elect under 501H. This means that you have a lot of flexibility to craft advocacy communications that you don't need to count toward your lobbying expenditure cap. So what are some of the exclusions, some of the things that are not lobbying if you elect the 501H election? Communications with your members regarding specific legislation are not lobbying. You can express a point of view on the specific legislation. You just can't include that call to action. Nonpartisan analysis, study, or research is not lobbying. What is this? These are white papers, research papers that may include a point of view on specific legislation, but the key here is that you need to have you need a full and fair discussion of the facts on a particular issue such that the reader can come to their own opinion or conclusion on that particular topic. And if you put these kinds of materials out there, even though you have a point of view on specific legislation in that report, it is not going to be lobbying that you need to count against your expenditures. You can host conferences where you have discussions of broad social and economic problems that don't refer to specific legislation. Efforts to change regulations is not lobbying under these rules. Requests for technical advice, self-defense activities, so lobbying with respect to your own organization's rights. And then the time spent by your volunteers. So if you have a fly-in and to talk to members of Congress, all those people who volunteer to make phone calls or engage in communications for you, you do not need to count that as an expenditure. The key here is that you must actually elect to be governed by 501H in order to benefit from these definitions and exclusions. I'm going to talk a little bit about campaign activity because this is a season, I think everyone's seeing that it's time for the 2020 primaries to kick off, and there's a lot of excitement around the election already. Activities to support or oppose the election of a candidate for public office could result in loss of tax-exempt status for a 501c3. There are some nonpartisan electoral activities that public charities can engage in if you're careful about conducting them within IRS guidance. That might include nonpartisan get out the vote or voter registration drives, publishing legislative voting records, candidate debates and forums, or issuing candidate questionnaires and voter guides. There are a lot of rules around these if you want to do them as a public charity, so I would recommend that you consult counsel before you engage in that kind of activity. I hear from a lot of public charities who are, they focus on various policy issues, and they want to know, well, what can we do with candidates? What can we say to candidates? And I think that the basic rule of thumb here is that you can continue to advocate in the context of elections your organization's policy positions. And in fact, you could lobby the candidates. You could say, we've done this homework, we've done this research, we think these are the best policies. But you can't ask candidates to take a pledge. You can't say, pledge to support this particular policy. The IRS will view that as signaling to members of the public that this candidate is the one that you should vote for because they've pledged to support your particular policy. You can provide them your policy papers and other materials that you make available to the general public, but you should provide those materials to all the candidates on a nonpartisan and equal basis. And you should not create content at the request of candidates. This is important both from your tax compliance, but also to avoid inadvertently making in-kind contributions to candidates, which is generally prohibited under federal and state campaign finance laws. So let's move and shift gears into 501c4 and 501c6 lobbying. I'm going to throw new definitions at you because, of course, we can't have the same definitions apply to all. What is lobbying for C4s and C6s, and why do we care? The reason we care, again, is that we can't take tax deductions for lobbying. But C4s and C6s, you may engage in unlimited amounts of lobbying. We just need to keep track of your lobbying on a tax compliance purpose because of the proxy tax that I talked about before, the lobby tax. You have to tell your members how much lobbying you're doing so that you can tell them the percentage of their dues that are not deductible. So what is lobbying? It's influencing legislation at the federal, state, and local level. That's exactly the same as our public charities are following. But we have some more categories here for our C4s and C6s. Influencing the general public with respect to elections, legislative matters, or referendums. Influencing high-level federal executive branch officials with regard to executive and administrative actions. So who are those? It's the president, the vice president, your cabinet secretaries, and their immediate deputies. So that's really high level. There's probably a lot of advocacy that goes on within the administrative agencies on various policy matters involving regulations that is not lobbying under this particular definition. But if you're having conversations at those high levels with those officials, then it is lobbying and you need to track it. And lastly, under this provision of the code, participation or intervention in any political campaign on behalf of or in opposition to a candidate for public office is, quote unquote, lobbying. Political activities, again, this is a little detour because of the timeliness, I guess, of this election season. 501c4s and C6s, as I said, may engage in some political campaign activities without jeopardizing your tax-exempt status, provided that those activities are not your primary activity. If you were primarily engaged in activities to influence elections, you would actually be tax-exempt under a different section of the Internal Revenue Code. You would be a 527 organization. And 527s are required to disclose their donors to the IRS on public filings. You could also potentially trigger registration regulation of your organization as a political committee under federal or state campaign finance laws. So C4s and C6s, you may engage in some of this political campaign activity. It just cannot be your primary activity. We'll talk a little bit more about the lobby tax rules. The lobbying and political activity portion of member dues paid to a C4 or a C6 is not tax deductible by the members as ordinary and necessary business expenses. The C4 and the C6 has two options under this regime. You can either notify your members annually of the amount of dues that are not deductible as a result of your lobbying and political activity expenditures, or you can choose not to notify your members, and instead the organization would pay what's called a proxy tax on the amount of your lobbying and political activity expenditures. You'd pay that directly to the IRS. It's currently at the top corporate rate of 21%. Most organizations do not want to pay that proxy tax, and so they choose to notify their members of the amount of dues that are not deductible. What does that mean? You need to know, you need to calculate how much lobbying activity you're engaged in so that you can tell your members on an annual basis the percentage of their dues that are not deductible. If your organization, your C4 or C6, engages in political campaign activities, you should also keep in mind that there is a tax on that activity. So the amount you spend on political campaign activities is taxable. The tax rate, again, is 21%. and it's assessed on either the amount of your political expenditures or the amount of your net investment income, whichever is less. If your organization doesn't have an endowment or other kinds of investments that throw off investment in income, then you will never have to pay this tax. But if you do have an investment income and you want to engage in political campaign activities, you should keep in mind that you may have to pay tax on the amount you spend. So we've talked a little bit about C3s and C4s and C6s, and I thought it would be helpful to just kind of bring together the idea that many groups use related tax-exempt organizations to fulfill their missions. So a C3, which may engage in a little bit of lobbying, but not too much, could decide that it wants to create a related C4 or C6 in order to do as much lobbying as they want to do. The C4 or C6 could also establish a political action committee to support or oppose candidates. So the C3, by creating a related entity that's a C4 or C6, has greater flexibility to engage in lobbying and political campaign activities. You would just keep in mind that that related entity would need separate funding sources, and the donors to that related entity would not be able to take a charitable tax deduction for their contributions. The related organizations can share staff and office space, and what we do is we put in place a cost-sharing agreement between the two organizations so that the C3 is not subsidizing improperly activities they would not otherwise be able to do itself. If you engage in lobbying and political activities as a tax-exempt organization, you're going to need to disclose information about that activity on your annual Form 990. We report this activity on Schedule C. 501c3s who have elected to measure their lobbying under 501h of the code helpfully only need to report the amount of money you spend on lobbying. If you don't take the 501h election, you have to report your expenditures, but you're also required to describe your lobbying activities. So you have a little bit of an additional reporting burden if you're not a 501h elector. For C4s and C6, you have to report your lobbying expenditures. You report the amount of money that you spend on political campaign activities, and you describe those activities. And then you calculate the lobby tax or proxy tax liability you may have, if any. And if your organization does owe the proxy tax, you would have to file the 990T and pay the appropriate tax. So to conclude this section, although this is applicable sort of generally as we move into lobbying disclosure as well, effective compliance requires careful tracking of time and money spent on lobbying. You need to know what your staff people are doing, how they're spending their time, because the salaries that you pay them are to do lobbying activities are lobbying expenditures. So you need to include your staff time, overhead and administrative costs. You also need to keep in mind that both on the tax code side and usually on the lobbying disclosure side, although not always, the background activities, the preparation activities that are engaged in to support your lobbying communications must also be included as lobbying expenditures. So the time and money you spend on research, planning, drafting, publishing, mailing in support of your lobbying communications all must be included as lobbying expenditures. We recommend that if your organization is engaged in lobbying activities, that you provide training to your staff on what is and is not lobbying so that they can help you keep track of the amount of money that you're spending for various purposes. And we like to put in a plug for timesheets. I know a lot of organizations don't like to use timesheets, but it is really very helpful when you're trying to comply with these rules.
May I ask a question? Grass tops lobbying, how does that fold into the definition of lobbying per the IRS guidelines? Grass tops. Is that something? So we have medical schools as our members, and so we will reach out to the deans of the medical schools to specifically call on their Congress members and form those relationships because they are more substantial than us when going to the Hill.
Right. So no matter what you call it, I mean, these rules are going to apply to your various scenarios. So if your organization is reaching out to members of the public, which may be your members, to encourage them to contact elected officials about legislation, that's often going to be considered grassroots lobbying. For the 501h folks, if you contact your members to contact members of the Hill or staff members, that actually is direct lobbying, I believe. So there's a little carve out there, so that you are not so limited. It doesn't fall into that more limited grassroots advocacy bucket. It would be, if they are in fact your members as an organization, then you could consider that direct lobbying.
Thank you.
But I will say that under most state and federal the federal rules don't cover, LDA rules don't cover grassroots lobbying, but under a lot of the state rules, that activity of going out to talk to your members could be considered grassroots lobbying.
So now we're going to turn and talk briefly about restrictions that apply to recipients of federal funds. To those of you out there who are receiving federal funding through contracts, grants, loans, or cooperative agreements, there are additional restrictions on your lobbying activities. And the next few slides you will see are variations on a theme, the theme being that you cannot use your federal funding to lobby. The first of these specific restrictions is what's known as the Byrd Amendment. It prohibits an organization from using federal funding to lobby Congress or the executive branch for more funding. So you cannot lobby for a specific federal award using your federal funds. And this doesn't prohibit you from lobbying Congress with respect to general programs, but it does prohibit you from using federal funding to lobby Congress to earmark funds for a particular program, project, or activity. Now, you can use non-federal funds to lobby, and the OMB has issued guidance that they will give you the benefit of the doubt that you are using your non-federal funds as long as you have enough non-federal funds to cover your lobbying activities. The one catch, you will have to disclose your lobbying activities. So if you are using non-federal funds to pay for lobbyists, you're going to have to fill out Form SFLLL, and that will disclose who your lobbyists are. The next set of restrictions is what's colloquially known as the super circular. If you've been at this a little while, you may be familiar with Circular A-122. A-122 was, and a number of other pieces of guidance were folded into the super circular. And this provides principles for nonprofit organizations to follow. Specifically, a federal grant recipient may not be reimbursed out of federal grant money to influence federal, state, or local elections, or to influence federal or state legislation through either grassroots or direct lobbying. And there's a similar set of restrictions that apply to commercial and nonprofit federal contractors. So again, same theme, that you may not be using your federal funding for lobbying. And then there is a statutory provision here that prohibits use of federal funding on lobbying at all levels of government. And this is a very broad restriction. It was originally enacted as a criminal prohibition, though it was amended in 2002 to remove the criminal penalties in favor of the civil penalties carried in the Byrd Amendment that we talked about earlier. The one thing about this is that it is a little bit broader. It applies not only to private organizations that are lobbying using federal funding, but this also applies to federal agencies or all government agencies that are using federal funds. There's not a record of this actually being enforced, but it is on the books and something to be aware of. It's sort of a general catch-all prohibition. One other thing to keep your eye on is that there are annual appropriations and other annual appropriations typically carry prohibitions on the use of appropriated funds for lobbying for propaganda or publicity purposes. This typically exists year over year, but you want to also be aware of specific statutory prohibitions or appropriation limitations on particular programs you're involved in. So being familiar with the particular funding that you receive and any restrictions on it. And then lastly is the Simpson Amendment. And for reasons that are not entirely clear, C4s have been singled out as ineligible to receive federal funding if they lobby. It is a blanket restriction on C4s. However, there's a significant carve-out because in the legislative history, Congress made clear that even if you are a C4 that receives federal funding, you can set up an affiliated C4 that does not receive any federal funding, but that conducts all your lobbying. So you can have side-by-side C4s that are separate. One receives the federal funding. The other, using non-federal funds, goes out and conducts your lobbying. Similarly, you could also use an affiliated C3 to do lobbying, though, of course, that C3 is subject to the restrictions that Janice talked about in that it can't do substantial lobbying or lobbying that exceeds its cap. So moving on from federal funding to lobbying disclosure, we're going to talk about, Janice talked about lobbying disclosure to the IRS. This is lobbying disclosure to other government regulators. At the federal level, this disclosure is to Congress, and states, virtually all states have similar disclosures at the state level, and local municipalities may also, and in certain cases, have very robust lobbying disclosure reviews. We're going to talk mostly about the federal lobbying laws, the Lobbying Disclosure Act, or LDA, but we will touch briefly on state lobbying disclosure. And the important thing to note here is that lobbying laws vary drastically. There are as many variations as there are states. And so if you think you may be engaging in lobbying activity, it's always best to consider the law and seek counsel before you engage in lobbying activities, because the thresholds for triggering lobbying disclosure vary widely. And the disclosures themselves also vary. Some of them may require you to disclose the amount you're spending on lobbying, who is doing lobbying for you, the issues you're lobbying, but they may also require you to disclose gifts you've made to lawmakers or officials. And then finally, if you trigger lobbying disclosure and are considered a lobbyist, you may be subject to heightened restrictions on gifts and political contributions in a lot of jurisdictions. So, federal lobbying disclosure. What is lobbying? And as Janice said, we cannot have uniform definitions for lobbying under all of these laws. So the LDA provides us yet another definition of lobbying. Under the LDA, lobbying is a communication or contact with a covered official about federal legislation, federal regulations, federal program administration, or federal nominations. And this includes communications that are oral, written, or electronic. And as I said, they cover a wide variety of subjects. And then once you have these lobbying communications, lobbying activity includes those communications as well as all activity in support of those communications. So preparation, planning, research, other background work that you have done in furtherance of those contacts is considered lobbying activity. And and we get a lot of questions about multi-use activities, and we did this study, but now at the time it wasn't intended for lobbying, but now we want to use it. Do we need to consider the costs of that as part of our lobbying expenses? And the focus here should really be on what the activity was intended for at the time it was conducted. So a study that you did a while ago, and then it was intended entirely for another purpose, but turns out to be useful in your lobbying, we may not consider that a lobbying expense. But if you're conducting the study or writing the paper or commissioning the research for the purpose of influencing your legislative advocacy, then we're going to consider that lobbying probably.
Just, I don't know if this is on. Well,
what if the covered official reaches out to you as subject matter experts? Because that happens to us monthly or weekly. Is that a lobbying contact and, testifying on the Hill?
Yeah, that's a great question. For those of you who couldn't hear online, the question is, what if somebody reaches out to you for your technical expertise? Is that lobbying? And the short answer is that it may well not be. There are a number of exceptions to lobbying activity that we're going to get to in just a second. But that may, for example, public testimony is one of those exemptions. And so your guidance when asked for, or perhaps even when not asked for, may be accepted from the definition of lobbying. So who are the covered officials, and so with whom are you talking to that triggers lobbying registration? On the legislative side, it's easy. If you are on the Hill and you are talking to somebody on the Hill, you are probably talking to a covered official, because everybody on who is a member, official, or employee of Congress from the receptionist on up is a covered official. On the executive branch side, it's a little bit, or it's considerably more narrow. It includes the president, the vice president, high-ranking military officials, officers and employees of the executive office of the president, officers and employees in levels 1 through 5 of the executive schedule, which is, again, your very senior positions that typically your cabinet secretaries, your undersecretaries, deputy secretaries, and agency commissioners and similar are executive schedule 1 through 5. And then finally, Schedule C political appointees. And these are non-career political appointees. And the Schedule C appointees vary by agency. So if you have dealings with a particular agency, it's very easy to look up who these people are. But in general, they are going to be higher ranking officials and not your career officials that you're dealing with.
Yeah, there's a publication that's called the Plum Book, and you could Google that and look it up. It's updated infrequently, every 4 years. But the Plum Book should identify all the people who are Schedule C political appointees. And if you ever have a question about whether someone is a covered official under the LDA in the executive branch, you can ask them, and they are required to tell you. So they may not know, but they can go ask their own officials if they don't know. So anyway, there are ways to find out whether you're talking to a covered official in the executive branch.
So again, we care about this because your communications with these individuals and any work in support of those communications are going to be considered lobbying activity under the federal lobbying laws. Now, to get to the question earlier about what is not lobbying, there are a number of important exceptions that oftentimes organizations work squarely within these exemptions and don't ever have to register and file federal lobbying disclosures. We've broken them out into a few categories here. To start at the top, for example, administrative requests are not going to be considered lobbying. If you're just emailing or calling a receptionist to schedule a meeting, or you're checking on the status of a matter, those contacts aren't considered lobbying because there's no intent to influence. They're fairly ministerial in nature. Moving down the list, on the legislative side, testimony before the legislature or a committee is not considered lobbying when it is on the record. And the important recurring theme here is that when it is public and on the record, whether that's oral testimony or written testimony in support of oral testimony or separate, that is not going to be considered lobbying. On the regulatory side, again, if you are responding to comments in the Federal Register or providing written responses of any other kind, those, again, are not lobbying. Similarly, law enforcement communications that are mandated by law are not considered lobbying. So if you receive a subpoena, that will not be considered lobbying. And then finally, public articles, speeches, ads, mass communications are also exempted.
A
Question about the testimony and regulatory comments, which we do a lot. We submit a lot of testimony and submit a lot of comment letters, and in them we're actually making specific requests or offering substantial comments that would alter legislation. So doesn't that kind of still fit into lobbying or not?
If you're allowed to have a position, and so you can fully state your position, but if you're submitting comments that it's on the public record, then that's not going to be considered lobbying. And what's important to keep in mind is with the federal lobbying laws, it's about transparency. It's about whether or not you have an obligation to tell the public that you are out there lobbying. So when you're responding to public notices and you're responding with comments, that's already going to be part of the public record, and so that's why it's not factored into whether or not you're lobbying under the LDA.
And will we also be covered under the quarterly reports? We list all the agencies we've had communication with, so that covers. Would that cover that, or kind of be part of the transparency, or?
So if your activity falls within an exception, you actually don't have to include it on your quarterly LDA report. So if your communications with a particular agency have all fallen within an exemption, you actually wouldn't have to list that agency on your quarterly report.
Okay. All right. Thank you.
One other thing that I want to go back to, because it's important, when you are responding to requests for information, it's important that your response be in writing. It's not a response to a request for information that's oral is not treated as an exemption in the same way that written responses are. So the request may be over the phone or in person, but the response must be in writing. Email counts as writing. So now that we understand what lobbying is, the next question is, who is a lobbyist? Because lobbyist registration under the LDA is required when your organization hires or retains a lobbyist. So who is a lobbyist? It is an individual who has more than one contact with a covered official and spends more than 20% of their time in a 3-month period on lobbying. So a lot of times, if an organization is concerned about registration, they may say, person A, you're going to make all of the contacts with covered officials, and that may not end up being more than 20% of their time over a calendar quarter. But so that individual doesn't qualify as a lobbyist and doesn't trigger registration. And then they may say person B is going to do all the background research and preparation, and while their time may be well over 20% of their time spent on lobbying may be well over 20% of their time for the organization, they have never made a contact with a covered official, and so that person also does not qualify as a lobbyist. So sometimes by separating out responsibilities, your organization may not be required to register. So if you are required to register, if you have a lobbyist and therefore trigger registration, you will be required to fill out a quarterly report that was just referenced. It's called the LD2. It is filed by the registrant. So if you're an organization that and your in-house employees have qualified as lobbyists, the organization files the form. It's a fairly simple form. You disclose the total amount spent on lobbying, rounded to the nearest $10,000. You disclose the issues you've lobbied on and the agencies you've lobbied, or the houses of Congress that you've lobbied. In addition to that is a semi-annual LD-203 report, and this is a report of political contributions. It's filed both by the registrant organization and the individual lobbyists. And so this is sometimes of note because individual lobbyists will be required to disclose their personal contributions. And so this is filed twice a year, and it's, if you are an organization with 2 lobbyists, there would be 3 separate reports. And as I said, this is what's covered on the LD2. And a lot of organizations get hung up on what counts as a lobbying expense. When we're reporting the total amount spent on lobbying, what goes into that? And importantly, it includes staff time spent on lobbying. It includes payments to outside lobbyists. It includes lobbying expenses. So if you are commissioning research, if you are paying or reimbursing expenses to the Hill, if you have other sorts of expenses that aren't staff time or payments to an outside lobbyist, those should all be grouped in. And then finally, overhead that's attributable to all of these things. So to dig into the LD 203 in a little bit more detail, it requires disclosure of certain political contributions, also payments made to honor or recognize covered officials, payments for certain meetings, contributions to presidential libraries, and presidential inaugural committees, that all must be disclosed. And also notably, organizations have to certify that, or all LD 203 filers must certify that the filer is read and is familiar with House and Senate gift and travel rules, which we'll talk about in a minute, and that the filer has not provided a gift with knowledge that the receipt of the gift would violate the gift rules. And so one way to do that, organizations approach this certification in various ways, but oftentimes organizations that are registrants will have trainings with their lobbyists and staff about what constitutes a gift so that they are able to make this certification accurately and truthfully. So this is a little bit of a breakdown about, now that we've thrown several different definitions at you about what is or is not lobbying, we like to throw in this comparison chart to show you what is and is not covered, and because it can be hard to track. So, for example, at the first row refers to, is state lobbying covered? Is state lobbying covered under the LDA? No. The LDA is concerned only with your activities to lobby the federal government. But 162E, regarding the proxy tax, and 4911, they do consider state lobbying as part of the expenses.
4911 is the definition of lobbying for 501H electing public charities.
And so I won't go through this chart, but we wanted you to have it for reference because it's important to recognize the differences between the definitions, particularly when you're tracking for multiple purposes.
And just so you know, the LDA drafters thought that they were going to be helpful to 501c3 and 501c6 organizations that lobby the federal government to say, you can use the definitions you already use under the tax code to track your lobbying, to disclose your federal lobbying under the LDA. And some organizations do choose to do that. They say, well, I'm a C6 and I'm tracking lobbying under 162E for my lobby tax purposes, and so I'm going to also use that method to disclose my lobbying activity under the LDA. That can work for you if you want to. The problem with that is that state and grassroots activities are covered under 162E, and so if you do a lot of state activity, or if you're engaged in federal grassroots activity, it could look like you're over-reporting under the LDA, because if you chose the LDA definitions for reporting, none of that would be included. So you have options to report under the LDA using either the definitions under 162E, or if you're a 501c3 public charity, under 4911. So we just wanted to close with this little chart that showed you kind of the differences. I think as a practical matter, most organizations that are engaged in lobbying at the federal level, that are tax exempt, that also need to keep track of their lobbying for tax purposes, usually are going to have to keep track of both under both sets of definitions.
So we'll just go briefly through state lobbying disclosure. As I said, these laws vary widely, and the triggers for registration and disclosure also vary widely. And so if you are involved in efforts to influence legislative or executive action at the state level, you're going to want to consult the law and seek counsel before you engage in that activity, because oftentimes states will require registration upon hiring or agreeing to pay a lobbyist for their activity, even if that person has not engaged in any particular contacts with covered officials yet. And so, or registration may be triggered on the first contact. And so it's important to be prepared and understand what you're walking into before you do so. The reporting frequency varies and the contents vary from state to state, as does the responsibility for filing itself. And so in some cases, the organization may be required to file. In some cases, it may be individual lobbyists. In some cases, it may be all of them. So it's just important to keep your eyes open and understand what your teams are doing and keeping lines of communication open. In general, there are 4 pieces to lobbying in the states that are highly regulated: legislative advocacy, executive branch advocacy, goodwill lobbying, just trying to foster relationships with covered officials may be considered lobbying in certain states, and then grassroots lobbying that we've talked about, indirect efforts to influence legislation or executive action. And so this is just a web of several of the issues that our clients often encountered, starting at about 10 o'clock. As I mentioned, noticing when people are not registered. States and municipalities vary in how aggressive they are in policing and regulating lobbying, but some of them do it very heavily. And so it can be an issue if they notice that you are lobbying but are not registered. At 12 o'clock, many states prohibit contributions by lobbyists or lobbyist employers. And so a lot of times you can run into issues about the right hand not knowing what the left is doing if one of your teams is involved in lobbying and another team wants to make political contributions. That can be an issue. And so making sure that you understand what all sides of the organization is doing. Reporting can be complicated and record keeping can be complicated. There are also some administrative requirements for lobbyists, particularly ethics training has become very popular. That's an ongoing trend towards requiring lobbyists to be trained in advance of actually conducting any lobbying. Obtaining badges, there may be particular formatting, or you may have to obtain a badge from a particular place. And then finally, states have varying audit policies. They may audit for cause, but they may just audit randomly. And so these are all things that can be encountered if you're lobbying at the state level.
All right, so we're going to switch gears a little bit. Piggybacking off the lobbying disclosure rules involves ethics and gift rules. So those of us who practice in this area often get the pleasure of being pseudo party planners. So if our clients say, hey, we want to have a dinner or we want to have a luncheon, we may be the ones to nix certain parts of your menu. We can say, you could serve this, but not that. And so as we go through these rules, you'll see when these things come up. I think that the biggest most important message I can leave, whether it's under the federal gift rules, state or local gift rules, is that you really should not give anything to an official unless you know it's allowed before you give it to them. That could be a cup of coffee. It could be very de minimis. But there is a lot of opportunity to fall into traps here with respect to gifts. So we're going to start out talking about the federal gift rules, and you'll see that there's a lot of complexity here. But the bottom line is that there's usually 2 buckets under gift rules, whether it's federal or state or local. There is lobbyists, and organizations that employ lobbyists usually have more stringent rules applied to them with respect to giving gifts to covered officials. And then there's everybody else. There's also probably another bucket of government contractors, but we really don't talk about that much here. So what are the rules? Essentially, here we've carved it out. There are different rules under the legislative branch. So the House and the Senate each have their own gift rules. They're similar, But there are some variations. So something you may be able to give to a House member, you might not be able to give to a senator or a staff person on the Senate side. So there's the legislative branch. And then on the executive branch side, there's also a breakdown. There are one set of rules that apply to essentially career officials in the executive branch. And then there's a more stringent level of rules that apply to political appointees. So essentially, what I want you to take away from this is that you should not give a gift unless there's an exemption, unless you know there's an exemption. What is a gift? It's really anything of value. These rules are written very broadly. So the most common things that we see are meals or beverages, perhaps travel expenses. You want to perhaps extend an invitation to an official to your annual charitable fundraiser or gala, so charitable events, tickets to sporting events or concerts, commemorative items like a plaque. You want to honor someone, some official, for the body of work that they've done in support of your issue, and you might put together a nice crystal bowl or a plaque like these, and then books, periodicals, and other informational items. All of these are considered gifts. Anything that's of value. So under the federal rules, we'll talk about two key exemptions. There's 26 exemptions, I think. So there are a lot of exemptions. They say no gifts unless there's an exemption, and then you have to read through the laundry list of exemptions to know whether you can give something. A lot of our clients want to host policy briefings or other kinds of receptions, and they want to be able to provide some food and beverage at those events. And so two key exemptions that we encounter frequently relate to what's called the receptions exemption and the widely attended events exception. For receptions, the food matters, although you don't need any particular format. So on the executive branch side, you could offer modest food and refreshments that are other than as part of a meal. So this might be soft drinks or coffee or donuts at a breakfast briefing, for example. You may not serve alcohol. On the legislative branch side, you can have food or drink of nominal value, again, that's other than as part of a meal. So you could have the buffet. You could serve finger foods. You can't serve hamburgers or sandwiches, something that the committees, ethics committees consider a meal in and of themselves. But you can serve alcohol on this, so you can have evening receptions on the Hill. And really, the topic of your briefing or your reception that you want to talk about is really unlimited. The widely attended event exception is a little bit different. So on the legislative branch side, you need to have an expectation that there will be at least 25 non-congressional persons in attendance. Now, if you extend enough invitations that would meet this number, it doesn't matter if they actually show up. There just has to be an expectation that there will be more than 25 non-congressional persons. So we need to meet that widely attended element. The other piece of the widely attended element is that those who are attending need to reflect a wide range of persons that are interested in the subject matter or that are from throughout an industry or profession. And the legislators or their staff members can appear, perhaps they have a speaking role, but even if they're not speaking, they can appear at the event as long as they've made a judgment that their attendance is related to their official duties. On the executive branch side, it's a little bit narrower. For the career folks, they can attend if it's determined that their presence is in the interest of their agency. They cannot make that judgment on their own, though. They need that to be cleared with their designated agency ethics official, DAO. They call it the DAO. So if you're going to invite folks from the executive branch side, you need to keep in mind that they need to show their DAO that their attendance at the event is appropriate for their official duties. So when you're crafting your invitation, you'll probably want to show the policy elements that that make it relevant for them to go. And you also want to give them enough time to be able to clear their attendance. And then for the administration officials, the political appointees, they may only attend if they are a speaker. So if you're inviting them to come and present, then they may attend at the event. There is no set number of people who need to be present, but you must have your attendees reflect a diversity of viewpoints or interests. At a widely attended event, you can serve a seated meal. You could also waive any conference fees that you might be charging to others. You could provide entertainment that's integral to the event to everyone who's present. That would be fine, but you may not provide free attendance at, for example, a concert or another kind of entertainment event that's after the conference. Any entertainment that's integral to the widely attended event is fine. Separate entertainment is not okay. So what happens if, it's not a widely attended event? The official that you're inviting can still come and participate. They could speak if you want them to speak, and either not partake of the food, so they could just choose not to eat or drink the beverages, or if there's a conference fee, then they could pay to attend, and then they could participate and eat the food just like anyone else. For these purposes, you should probably develop a per-person cost for the event. If there's a ticketed cost to attend the event, then you need to use the ticketed cost, not the derived cost of whatever you've calculated. And you would include, in order to come to that per-person cost, food and beverage, but you don't have to include like the overhead, like the room rental and staffing when you're coming up with the per-person cost of the event. Some other exemptions, those of you who are here in the room, you probably have friends who work on the Hill, and maybe some of them are members of Congress or senators. There is an exemption for exchanging gifts with your friends. How do you know if this person is really a friend? Well, I think we all know what a friend is, but the rules indicate that, if you have a history of mutually exchanging gifts, that you've been friends for a certain certain period of time, those are indicators that this is a personal friendship. If you are, however, giving every single member of Congress the same gift, that seems to suggest that maybe this is not a gift based on personal friendship. You also can't seek reimbursement from your employer for a personal gift. So if you do have a personal friendship with a covered official, on the legislative branch, you could give gifts of up to $250 per year, and there's no limits on the executive branch side. Other exemptions that might be important to you in your advocacy, you may want to provide informational materials like books and periodicals. You could do that. That's not a gift under this exemption. The exemption does not apply to software, however. There's also an exemption for items of nominal value. So baseball caps, T-shirts, and greeting cards are specified in the rule as items of nominal value, actually kind of regardless of how much they cost. And then there are other items that are less than $10 are permitted. So, maybe your association has, squeeze balls that are branded or some other things that you want to bring to your Hill visits and that sort of thing. Those items could be given under this exemption. The House and Senate also have rules for travel. So you may want to host a member of Congress or staff persons at a site visit, or you might want to help underwrite the costs of their attendance at a conference that's out of town. If you do, then you need to pay attention to the travel rules. Under the travel rules, a trip sponsor can pay for covered officials' flight, hotel, and meals. There are limits on the duration of the trip, and those limits depend on whether you're an organization that employs lobbyists. There are lower limits if your organization employs lobbyists. There are also limits on the degree to which lobbyists may participate in planning a trip or in attending the travel portions of a trip. If you want to sponsor flights and hotels and meals for a covered official under these rules, you're going to need to fill out paperwork, which are things that we help with frequently. The paperwork must be submitted at least 30 days before the trip. You disclose the full itinerary that the official will participate in, and the amount of money that's going to be spent. And there are limits on how much you can spend on the various food and beverages. Usually it's subject to the GSA limits for the jurisdiction in which the travel is taking place. And you also, kind of like with the widely attended events, you can't tack on fun entertainment, and leisure activities with this. You need a full itinerary of policy-focused activity. So again, these rules that we just talked about are at the federal level, but all the states have ethics rules. Many municipalities also have ethics rules that will limit gifts. In Florida, I believe you can give a flower arrangement upon the opening day of the session, which is delivered to the legislature on the floor, and that's it. You cannot give any gifts to legislators in Florida. So it really varies. Other states and localities have actually pretty high thresholds for giving gifts, so you could give, up to $250, per gift event, and there's no reporting or anything like that. On the other hand, there are states where if you give a gift, that act of giving a gift to a legislator may actually make you a lobbyist. It triggers lobbyist registration. So the rules vary widely, and like I said, I think having a policy of no gifts unless you've actually vetted and know that it's okay, or that you're prepared to deal with the consequences of giving a gift, which may include lobbyist registration and reporting, is probably the best policy to have. Some other practical tips: if your, job within your organization is to process expenses, maybe you're reviewing expense reports from your team, pay attention if it looks like, someone has potentially treated a covered official, whether, federal, state, or local, to a meal. Watch out for that and ask questions. Even if it's already happened, sometimes there are ways to fix it. You could ask that if it's not permitted, for example, you could ask them to pay for it, the covered official. So just pay attention to receipts and expense reimbursements. And just generally speaking, before you plan an event or before you go out and treat 5 legislators to a nice dinner, talk to your lawyers first. All right, we are nearing the end here. We wanted to conclude with some tips for grassroots advocacy. First and foremost, we're going to talk about your telephone and texting campaigns. Everybody, I don't have my cell phone with me right now, but my cell phone is always in my hand. This is the way we communicate now. And a lot of grassroots advocacy involves email, it involves telephone calls, and it primarily is involving texting more and more. You should know that calls to cell phones and texts are regulated under the Federal Telephone Consumer Protection Act, the TCPA. And then they're also regulated under state telemarketing or auto dialer laws. The TCPA, a lot of the TCPA doesn't apply to nonprofits, but I think you should know that with respect to advocacy calls or texts, so these are calls or texts that don't involve marketing commercial products or services. If you're marketing commercial products or services, then the full TCPA regulations you need to know about. But for your advocacy calls, for your nonprofit advocacy calls, you need to know you must have the prior express consent of the recipient to call or text a cell phone. So you need to be careful about how you get your cell phone numbers, and you need to know whether you have the consent of that person to send them a text or to call their cell phone. The consent does not need to be in writing, but we do recommend it because if you are, and in writing can be loose, we can come up with lots of different ways, but you need to have some record of consent, because if you're challenged, if someone says you didn't have my consent, it's helpful to be able to go back and look at your records and say, yes, in fact, we do have your consent. You checked this box when you sent us your cell phone number that you agreed to receive text messages from us or cell phone calls. It's okay for you to deliver robocalls. What are robocalls under the TCPA? It's a pre-recorded voice message. So it's okay to deliver a pre-recorded voice message to a landline without prior express consent. But all pre-recorded voice messages must include identification information. You have to have your organization's name at the very beginning of the call. Hi, this is Janice calling from Venable. And you have to include a real telephone number of your organization, either during or at the end of the message. You do not have to worry about the do not call list. Your nonprofit advocacy calls are exempt from the do not call restrictions. We're aware of a lot of innovation in what's called peer-to-peer texting. So there are vendors out there who have platforms that allow for an individual to send texts. They come up with, your organization come up with a script and then and provide you with a contact list, but individuals will send the texts. We think that these texting platforms probably are not covered by the TCPA. And so I think they are growing in popularity. The key here is whether the technology involves an auto dialer, which is often the subject of litigation and, regulation. But if there's an auto dialer involved, you need to pay attention to the TCPA. So the most important thing that you want to know for TCPA purposes is you need the prior express consent of the recipient before you call or text. If you are engaged in a text campaign, a short message service, SMS campaign, there are some best practices that you should keep in mind. Again, you need to require opt-ins before texting. That's how you get your prior express consent. You should be honoring all opt-out requests, and you should be providing an easy way to opt out. We recommend that you follow calling hour restrictions under the TCPA, even though your nonprofit advocacy calls aren't actually subject to those under the regulations. But, be courteous. Don't call people before 8 a.m. or after 9 p.m. There are industry best practices, and wireless carriers have basic rules about SMS campaigns for nonprofits. We recommend that you follow those. And we recommend that you include disclaimers in your calls to action. If you put out, for example, a flyer or an email that says, please text, and you have a short code to get involved or to reach out to your member of Congress. In those calls to action, we also want to make sure that you include disclaimers that say message and data rates may apply, messaging frequency varies, text stop to opt out, and then you include a link to your terms and conditions and your privacy policy that are on your website. Email. The thing to keep in mind about email, there is a law called the CAN-SPAM Act that applies to commercial email. A lot of your advocacy email will not be considered commercial advertising, but you should be careful about mixed purpose communication. Sometimes organizations get involved with selling or not selling, but promoting products or services of members, for example, that might be subject to the CAN-SPAM Act, but your pure commercial, pure advocacy emails shouldn't really be subject to the CAN-SPAM Act. That said, we do recommend some best practices that would allow you to be in compliance with the CAN-SPAM Act. You should send all emails from a legitimate active email address. The from line should accurately identify the individual sender or the organization, or both. The body of a message should contain a valid postal address for the organization. Your subject lines may not be misleading. You should put the word advertisement in either the subject line or the body of the email if the message does in fact advertise or promote commercial products or services. And you should offer a way to opt out of receiving email, like a link to your webpage where you can opt out, or provide an email address, and maintain a system to enable you to promptly honor those requests.
So for those of you who are on television and radio with your advocacy, there are requirements about sponsorship identification set by the FCC. Specifically, your television ads and radio ads must say paid for by sponsor. And it has to be the name of the sponsor, the legal name. And then importantly, for the FCC's requirements, there are duration requirements. It has to appear on screen for 4 seconds and needs to be spoken clearly. And there are also size requirements. In addition to this, if your communications are of a political nature, it's important to keep in mind that the FEC sets additional requirements for electioneering communications that refer to a candidate close in time to an election, and communications at any time that advocate expressly for or against a candidate. And the FEC's requirement is paid for by sponsor, inclusion of a website, URL, and not authorized by any candidate or candidates committee. For television, there also has to be a voiceover saying sponsor is responsible for the content it's advertising. And again, there are size and duration requirements. So when you see political ads over the course of the election season, these are the requirements.
Yeah, and we called out the electioneering communications rules because these would apply to really just pure issue ads that your organization might be running close in time to an election. It's 30 days before a primary or a national nominating convention, or 60 days before a general election. So if you had a radio or a TV advertisement that was about a particular bill, and you were trying to encourage folks to reach out and contact a member of Congress, for example, who happened to also be a federal candidate at the time, call, Senator so-and-so to support this bill, that could be regulated under the federal campaign finance rules as an electioneering communication and would require these additional disclaimers.
And digital advertising is something that has gotten a lot of attention since the 2016 elections, and digital advertising platforms are constantly evolving in their sponsorship identification requirements. And it's important to note that these sponsorship identification requirements often cover ads, not only ads that relate to elections, but like Janice said, ads that may pertain to issues. So for example, the Facebook requirements currently cover ads relating to any national legislative issue of public importance. That phrase is not well defined, and so may be very broad. And so it's important to know that if you are doing digital advertising, that the platforms you are working on may have their own requirements, and oftentimes that is a barrier to entry. Facebook will not let you run your ads before you comply with their requirements, and those will vary from platform to platform. And then you'll also want to have a privacy policy that addresses the use of cookies and other analytics tools to cover your bases.
And so we'll leave you with a note on privacy and data collection, which is a nice segue into the March webinar, which we encourage you all to attend. it's important to have a privacy policy in place as you are collecting people's information, whether it's their email address or their cell phone, and that you actually adhere to the promises that you make to people about what you're going to do with their data. There's actually a lot of flexibility for you to be able to use the data for your own purposes, maybe share it with like-minded organizations for similar purposes. But if you say in your privacy policy, we will never share your data, you should not be sharing the data. So just keep this in mind, that the promises that you make to your supporters, to those who are giving you their information, is something that is actually consistent with what you intend to do with the data, and that you can comply with it. We do also recommend, to the extent you can, to implement reasonable measures to protect against data breaches as much as possible, and then lastly, disclose whether or not you may sell or share the data, and don't do it if you've already told them that you won't. Any last questions, as we have about 5 minutes left, I think? Sure, that would be great.
So I actually have one question about the IRS filing and one question about the LDA. So for the IRS filing, when we're talking about direct lobbying, does that have to include, when you're talking about attempts to influence legislation, a specific bill number? Or is it just like if we're talking about a conceptual thing, like we support access to health care, but we're not saying we support HR 1? Does that count as direct lobbying if we're meeting with Hill staff?
So first of all, there's no filing from the IRS point of view.
Yeah.
So you don't, that piece is not really about disclosure and transparency as much as it is policing the amount of lobbying you're doing so you maintain your tax exempt status. But, if you're having communications with officials about broad policy ideas, I think you could probably qualify for one of the exemptions that I laid out under 501H. So if you're not taking a specific point of view on specific legislation, then I think you're not lobbying in that case, even though you're having a direct conversation with a covered official.
And then kind of the same question, I guess, for under the LDA, when you're thinking about the 20% there, if we're going in, I'm definitely having one contact, but the meeting is kind of the same. Like, I'm not saying we really want your boss to co-sponsor HR 1. We're saying we really hope your boss is in favor of healthcare. Would that count for my 20%?
So the LDA is a little bit more specific. They define lobbying as contacts that are attempting to influence legislation or legislative proposals.
Okay.
And so proposal is a little bit vague, but certainly if it's a proposal that's been put out by somebody as something that should be introduced as legislation, that is going to be, if you're having a conversation about that, that would be considered legislation. If you're just talking about an issue generally, it may not be lobbying, but you want to be careful there. Just because you don't mention a bill or mention a proposal by name doesn't mean that you're not lobbying if you're otherwise describing the points of that proposal or legislation.
And so if I decide to err on the side of caution and say, okay, that meeting was lobbying, but if it still doesn't rise above 20% of my time for the quarter, it doesn't matter anyway because I haven't tripped that trigger.
Correct.
Okay. Okay, thank you.
All right. Well, thanks, everybody. If you want more information, we have links to the Political Law Group's blog, Political Law Briefing, here in the slides. We also have links to Venable's nonprofit group for indexes of our articles and our monthly webinars, where you can find this presentation again if you ever feel like you are looking for it. And you can always contact me or Meredith if you have additional questions. Thank you so much.